Well, good morning, everyone, and welcome to the On Time On Target Morning Brief, where we invest with fighter pilot precision every day. Make sure you have your chat window open and your Q&A window all set up. Standard disclaimer applies. This is a financial education presentation. Excuse me. Excuse me. So you have to do your own due diligence before acting on anything you hear in this presentation. So welcome to Thursday, January 7th, after the single craziest day for democracy that I have seen. Looks my voice is going to give out this morning due to allergies. Try to stay ahead of it here with some water. So yeah, yesterday, what an interesting day. You have the sitting president inciting some violence in the Capitol. You have him getting banned from social media and then going around it by going through his social media director. I thought that was funny. It's like Trump's banned, but yet I'm still seeing tweets from him. Well, okay, through a different account. So kind of an interesting day there, but kind of ended with an all is well and the peaceful transition of democracy and peaceful transition of power is apparently intact. So all of that was being wrestled through yesterday. What does the market do? Yeah, it goes higher, right? So a lot of different forces are on the market right now. That's what we're going to talk about. Stimulus and vaccine rollout. Those are obviously tailwinds. And then today we're going to talk about a headwind that's coming up now that the blue wave is in place, right? And that's tax reform. So we're going to talk about that. All right, we're going to grow our money, protect our money, live off our money, specifically talking about protecting our money today with what I would call a tilt towards protection as we go into 2021. And I did that a little bit going into the election, but I think it's time to do it again until we start seeing what the tax proposals are, which I'd imagine something's going to hit the table. I mean, into January is probably a little soon. It's certainly going to be talked about, but probably not actually becoming a bill and voted on and that stuff until maybe February or March. But I did have an interesting question yesterday. Capital gains are going to be part of this conversation, and capital gains are tax favored, obviously right now. And there's talk that they might lose their protection, right, and just be taxed as income. And the question I had yesterday, which is pretty good question, is if I'm selling stuff now in 2021 and incurring some capital gains and they change the tax law in, say, April, will it be retroactive for all of 2021? And the answer is, well, it could be. It depends on how the law is written. And I would say that it probably will be. Generally, tax reform that is passed early in the year is effective for current year, where some tax stuff that is passed towards the end of the year is not effective until the following year. However, the Tax Cuts and Jobs Act that Trump had was passed, I think, in a November timeframe, and it was effective basically for that current year, right? So he did that in 2017 because that's what delayed everybody filing their taxes, because TurboTax and H&R Block and the CPA nation of the world had to learn the new rules and basically implement them to the previous year from fairly fresh legislation. So it could. So what am I telling folks? I'm saying, hey, hunker down. There's sell when it makes sense to sell and incur capital gains, without thinking about it too much. But I wouldn't rush out and try to fire sale everything thinking that you're going to get out of the change for the capital gains rate, because that's probably not the case. And if they don't make it retroactive, so think about how that'll play out. Say they vote out the tax favored status of capital gains, and they don't make it, they don't implement it until 2022. There's going to be a fire sale, right, of everything, businesses, houses, of everything, to lock in the former rate. So it'd really be kind of dumb if they didn't make it, active for current year, meaning 2021. So just some initial thoughts there. Also, question today: what's the highest federal tax bracket? Now, I'm tired of financial people trying to scare others, and that's not what I'm trying to do. But we're going to walk through history a little bit and look at some of the numbers from yesteryear on how high this highest federal tax bracket could be. And I wouldn't, if the administration, the incoming administration with the blue wave, may vote a fairly high, they want to target the, higher income. So there's rich and then there's high income, which is kind of funny because I wouldn't say the true rich, but many of the really rich folks out there don't have income, right? They don't have jobs, they own things, right? So and you tend to also find some folks out there that have high incomes that don't really have net worth, right? They have high incomes and they have a high lifestyle where they spend most of it. And those are the folks who are going to get targeted, ones that are pulling in the 400,000 a year and above type crowd. So we'll see. We'll see how this all plays out. All right, our flow today is long, short, open, short, long. We'll go around the world with a market review. Come back to the U.S. headlines, which is mostly just chilling out after yesterday. We'll talk the long-term investments. I'm basically going to talk about FIXD, which is where I'm going to park money for folks, and we'll take a look at that chart. We'll get into our short-term trades. If you look in the chat room there, I do have two longs, DXC on an acquisition and ACB, which is Aurora Cannabis, on a continuation of yesterday's marijuana theme. Marijuana, now that we have the blue wave, obviously the thesis there is that it'll pretty well in the next 4 years, I think, get completely legalized nationwide. So we'll see how that plays out. All right, we'll execute the market open. We'll transition to Q&A, and then we will go on about our day. For contingencies, if you have any tech support issues, contact me at steve@ototnow.com. And if you have any questions on what we're talking about when we get to the day trading portion, there's academic materials available at ototnow.com as well. All right, let's go ahead and take a look at TD. No, let's take a look at, TD Ameritrade first and look at where the market has been. So there's our day trading setup. We'll get back to that in a minute. I'm on the road this morning, so I only have the one screen to work with. Okay, here's where we are. So obviously, here's our green bar, which was, violence in the Capitol. You had the guy with horns sitting in Pence's chair in Congress. I mean, the memes from yesterday are going to be around for a while. That was obviously the cuckoo birds that are out there doing that. And they'll be held accountable because they were all taking pictures of themselves. So we'll the justice will be brought to them. But they made their point. So, but the memes that come out of it are going to be pretty priceless. So when you look at what the market do, the market powered higher, right? Tech sold off, so the Nasdaq was down, but the rest of the market was up. And I think they are thinking, I think half the country is completely giddy that Trump's going to be not only out of power, but probably his exit is not doing a whole lot for his legacy, if you will. I think the way he's exiting here. So take a look at that. Still see the SPY screen. Thank you for that. Let me see what I can do here. You should be seeing the SPY 1 year screen is what we're taking a look at. So off to the right there is what we're looking at for yesterday. Let me zoom in here and go to the 5-day on the SPY. I'll give you a little bit better for. So here was yesterday, the crazy day. We powered higher in the morning, and then the afternoon we had the march on the Capitol, kind of sold off a little bit, but still stayed higher for the S&P 500. All right, and then here is our day trading charts. You can see, only see two of them today. We have the SPY on the left, and then we have Aurora Cannabis going long. The arrow's already there, and then DXC going long as well. All right, let's switch over to CNBC, and we will go over the headline review. Excuse me, market review around the world. Here are our futures this morning, pretty heavily into the green, including tech. So why did tech get hit? Let's talk about that for just a second. So the blue wave is going to bring increased scrutiny on tech firms and how much power they have. And are they monopolistic? I guess I can't say that. Are they a monopoly or not? And, bring them in and make them testify in front of Congress. We're going to do a lot of that, I think, in the next 4 years. Now, what's going to change? I will contend nothing's going to change. I don't think that these companies are true monopolies. If you think of, and I had this conversation with a few people yesterday, a monopoly is bad. So it's bad for the consumer. So the government, by breaking up large companies, are supposed to be protecting the consumer. So when you think about how these big companies like Google or Facebook or Amazon are affecting your life, I don't think you're being price gouged. Google's free. Facebook is free. I mean, you opt in to use it and you give away your personal info. I mean, I got all that, but I mean, from a dollar bill perspective, it is free. And then Amazon, I mean, do you think that makes your life easier or harder? You think you're getting price gouged on Amazon? I don't know. I find some of the best deals out there. Sure, I'm willing to pay a little bit of a premium to get it in a day or two. And I do have a membership for Amazon Prime because I think that's, you know, economically a steal that I pay $99 once and get basically free shipping for a year. Yeah, please, government, don't hop in and screw that up, right? You know, these are pretty daggone good deals. Anything in the whole world that you want to have delivered to your door, you pretty much can. And, you know, if you want to learn how to fix something, yeah, you are the product. I hear you, Predator, there. Um, the Yeah, I mean, if you want to fix something, literally, I'm not that mechanically inclined, but you know, if something breaks around the house, I can go to YouTube, Google how to fix it, and at least give it an honest shot myself. It's like, wow, the power that is at our fingertips, where we never really had that, certainly, you know, 20 years ago or earlier, is kind of crazy. So please don't screw that up for us, right? So anyhow, enough of my rant on what's going on in the tech world. So do you sell your tech here? No, I did. I shaved some Apple yesterday. There is a tilt towards protection. So you have to sell something. A lot of us are very overweight Apple, so you can peel back some Apple shares, but it's not like you're really selling it. You're just transitioning that money to safety. Okay, let's go around the world here real quick. So there's our futures we already talked about. Europe is split. Nothing going on there of real note. Japan's much higher, not really related to us. China, yeah, the telco shares, they're back on the delisted list. That's kind of a comedy, if you will, going back and forth on that. There's our numbers from yesterday. So tech a little bit in the red, but not all that much. Volatility is down. So volatility sells off 7% when cuckoo birds are in the capital. Market has a pretty good sense of humor. All right, you heard a lot about interest rates and bonds and all of that, and the devaluation of the dollar. Yeah, well, I think it's healthy that the 10 years getting back above 1%. Maybe it marches all the way to 1.5%. That'd be kind of nice. There's a little bit of a headwind on bonds there when that's going on, but not enough to even worry about. If you have individual bonds, you don't care at all. If you're in a bond fund, a little bit of a headwind there, and you'll see it on the chart when I look at it, but not enough to worry about. Okay, oil stable at 50, gold, silver, not much of a spike yesterday with cuckoo birds, but there were Bitcoin. You know, it's going up a couple thousand every day, it seems, and I think it's going to march higher. I don't know what the call is here, but probably past 50K in the next, I don't know, month. I think. I mean, it is literally on fire. I follow. This is an entire. It's almost like a cult. It's think of it like Tesla. There is Bitcoin Nation, and they don't listen to anything else. The future is Bitcoin. So anyhow, we have some now. All right, let's go back to our headlines here at the main screen. 4 dead from yesterday. You've probably already heard that. Kramer was talking about machines don't have a conscience. There also is like, there's not many sellers. For a market to go down, people have to be selling. And actually all the money in January that rolls in, you're net buyers, right? Because you have all the IRA money, the front loaded 401k. So there's a lot of money coming in. So we shall see. All right. A lot of refreshers on the Constitution. Should Pence invoke the 25th Amendment? No, let's not do that. We're a couple weeks away, so let's not confuse things further. Anarchy in the USA. Well, there as bad as yesterday was. Let's step back. Was it under control? Yes. Were there mechanisms in place to make sure it was contained? Yes. Did we activate the National Guard like we should in these situations? Yes. Did local states provide assistance? Yes. I don't know. For your population that's obviously upset, how was it handled? Pretty good. 4 people are dead. That's not good, but 4 is not an out of control number. So it's not really just anarchy in the USA. That did not happen. Today, I think there's cooler heads are going to prevail. I really don't think we're going to see much of anything as far as excitement downrange, if you will. All right, there's a shout out about the future of marijuana legalization. You will hear a lot more about that. Okay, let's look at this real quick. Now, when I say a tilt towards portfolio protection, what does that mean? Yes, well, you can do covered calls. That's another way. And I've done a ton of those and I will be doing more. I haven't really done those for a lot since March, to be honest, because the market just kept powering higher. When a market's powering higher, it's tough to put covered calls in place because there's nothing that is out there that potentially stops it. Well, now we have that thing, that event that nobody's talking about really, nobody's seriously talking about, and that's tax reform. So that is going to, when you think of the corporate tax rate alone, remember before the Tax Cut and Jobs Act of 2017, the federal tax, or excuse me, the corporate tax rate was 35%. Trump dropped it down to 21%. That was a 14% tailwind. And honestly, your shares of whatever company you had, since they're all public companies, immediately was worth 14% more. Okay, like bang, overnight. Now, that's not how markets price that in. They price it in a little slower than that. But when you think about things acting in reverse, if it goes from 21%, it's probably not going right back to 35, but I don't know, it could, right? With the hatred for Trump, they might try to just immediately reverse everything he did. So we'll see. But yeah, say it goes to 30, which I think is a more palatable number. And honestly, even as a business owner, 20 is pretty cheap, or 21 is pretty cheap, to be honest. So it could go right back to 30. Well, if you do that, well, you would think there would be an immediate 9% drop in the market because your shares are immediately worth 9% less. And that's just math. So there's going to be a headwind from taxes. So when you tilt towards protection, you're going to move into bonds. Now, you don't want to go into individual bonds unless you're planning on holding them for a long time, which those of you that have individual bonds, that is the plan. But if you're going into a bond fund, it's going to be FIXD or equivalent if you're doing it on your own, but this is the one I use. And this has sold off a little bit. I mean, the chart looks ugly, but this is really, what, 80 cents, 60 cents of a move here. This thing pays out monthly. It pays 3.5%. So it's like a bank account, except for you get 3.5% from it. So, and it really hasn't moved down, did move down a little bit yesterday. So pretty good buying opportunity as far as tilting towards protection. So that's what you can expect to see. Most of you have this a little bit. You're going to see more of it show up in your portfolio if you're with me. Okay, let's go over to our day trading screen and get ready for the market open. Like I said, nothing to the downside. Let me post that again in the chat real quick for, I saw the name pop in there. So there we go. We're looking at ACB and DXC long. I'm really not in love with either. So I may not, I'm like right now, I'm spring loaded not to trade these, but we're going to keep an eye on them as they open. So I need a second here just to get my stuff set up and a drink of water. I'll be right back. Morning, everyone. Welcome to the On Time on Target play of the day. We are 20 seconds from the market open. You have 3 screens in front of you and a half of a fourth, so disregard that fourth part there of luck and coffee. You have the SPY right here, and all the futures are in the green, so the momentum is higher right now, coming off of yesterday's kind of shameful day on into a day today. And then we have Aurora Cannabis, which is the marijuana theme that was the opening belt running higher yesterday. And then you also have DXC on acquisition rumors by ATOS, if I'm saying that right, ATOS, valued the company at $10 billion. If you're not familiar with DXC, they are a spinoff of Arthur Andersen / Accenture modern day. So we'll take a look at those both long. I'm not in love with either, and I couldn't find anything short. So we'll surf around here a little bit. Let's take a look at ACB first. This is a pretty negative action from 11.7 down to 10.5. I kind of like it though. So let's look at 10.45. So I am not going to do this trade myself, but I kind of like the setup with a 15-cent stop at 10.60. We're going to zoom in here. So the entry point would be 10.60 with a 15-cent stop if it goes back north. And again, this will be long. I'll call this. I'm not going to personally trade it, but I do like the selling off here, and it's kind of out of our range, so might not do it. I don't know. We'll see. All right, let's take a look at DXC. Is pretty well flat. A little bit out of our range too, so not much going there. Market is powering higher. we'll keep ACB up again. The entry point here would be 1060. If it stays in this range and then goes higher to 1060, no, it's not going to. So down it goes. All right, let's surf around a little bit and see what's going on in the world. No trading today. All right, you got Clickstream up 22%. Again, that's a penny stock, not suitable for most people. There's our DXC up 10%. Okay, Bitcoin. Let's talk about that since we have an extra second here. So this is the 5-day chart on GBTC, which is the Greystone Bitcoin Trust. So you can't necessarily buy Bitcoin outright. Well, I mean, you can, but you can't buy it through a market/brokerage account. So you can get a coin wallet, go to Coinbase, all this stuff, which I'm probably not saying it exactly right, and that's okay. But you can certainly buy it. You go through Google, you'll figure it out and get your token and all of the passwords you can't ever lose, that sort of thing. So you can buy yourself some Bitcoin if you want. Or if you want to participate through the market, this is really the purest of the Bitcoin plays that I can find out there. Let's see. So this was Wednesday, Tuesday, Monday. I can't remember which day I bought in, Monday or Tuesday, where I finally just closed my eyes and said, I believe, hit the I believe button and bought in. But somewhere back in here, I want to say it was 33 something, but I don't know. That's when it showed up in your accounts, if you're with me. And, we got to keep an eye on this thing. It's not a buy and hold forever, but it certainly is smoking higher and it has a lot of potential. And when you think of so what's given it the big boost is, first of all, the OCC said they were going to let banks kind of use Bitcoin as far as settling transactions. The Morgan Stanley gave it $146,000 price target, I think. Twitter has blown up on Bitcoin Nation as well as some others. The Winklevoss twins are saying it's going to be worth $500,000. I mean, that stuff has always been around, but it certainly is getting a lot of traction now. And where the mainstream is kind of buying into it is saying, is inflation going to happen? Now, I've said repeatedly that the conditions are not really set for inflation. The conditions are pretty much mirroring a lot like coming out of the quantitative easing spending that was going on through 2007 through 2009, and then on into 10 and 11, where we had QE, 1, 2, 3, 4, 5. We thought we were going to get QE 20, that sort of thing. Well, we're kind of in a QE phase again now. I mean, there's stimulus already been passed. The $2,000 checks, I'd imagine by tomorrow, that's going to be the topic is, wait, does this mean I get $2,000 now, for the selfish, greedy American? So I might do a thing on that tomorrow, but we'll see. It has to hit the news cycle today to do that. But it's similar in the fact that we really can't raise interest. The Fed really can't raise interest rates. And that's the difference. That's why I don't anticipate inflation. I know it has everybody concerned, and I get that. And that's why Bitcoin's going higher. It's because you can't trust the dollar. It's a fiat currency. It's going to zero. Well, no, I don't buy that. But interest rates, the Fed has said they're going to hold them low for 3 years is what they anticipate. I think it's going to be more like a decade. I think we will be trapped in a low interest rate environment. And that's probably not good, but it is good for the markets because it forces everybody into business ownership instead of just buying CDs. But don't forget, if I'm wrong, and hey, I've been wrong on plenty of things, but if inflation does go higher and interest rates go higher with it, that means you can have a CD that pays 4% instead of being exposed to bonds. So there's an upside to that. I talk about wealth and being on the right side of wealth. There's people that are in debt for their whole lives. They're never on the right side of wealth. Well, once you're out of debt, where all you have is your mortgage, which is leverage on an appreciating asset. Once you get to the other side of that, now you actually benefit from a lot of these things. So if inflation rips higher, the rich will get richer. You will be in the market. The market will inflate with inflation. You will have assets that inflate with inflation, like your home. You will be able to now, if interest rates go up, have CDs. Bonds will pay more because you loan your money to companies and they have to pay more for it. So when you're on the right side of wealth, you can actually benefit from things like this. So you'll hear the inflation narrative a lot. But anyhow, that's why Bitcoin's going higher. Kind of a long answer there. Let's see what else is going up. Got Clickstream hitting 43. Must be something in the news there for Clickstream. A lot of names up 4 to 6%. That is pretty impressive across the board. Let's see what's on the downside. Lucky no, down 4%. That's not the end of the world. Let's pull the chart. That's what, 850, 840. Nope, all the way down to 817. So pretty significant drop there. But okay, let's get real. Let's go back to Monday. That's where it was Monday. So not the end of the world. Doc, LMT, Coke, Twitter, Siri, Alibaba. Jack Ma has been found. All right. So not much in the red there, but there are some names in the red. Okay, let's transition over to the topic of the day, which is the federal tax rate. So when I say taxes are going up, here's some philosophy. I would say, and I'm no expert here, this is just these are my opinions, so don't shoot me. But I tend to think that the Democrats try to go for everything when they go for something. And I think that if they would really have a smarter approach to it, or a higher probability of success if they went at this piecemeal. And so here's what I'm talking about. I think they will put together this huge tax package that includes everything under the sun, and then have trouble, spend forever trying to get it passed, even with a blue wave government. It doesn't just, people still don't support these wholesale changes. So I think if they come out with a huge package here in February, March, I think it doesn't get passed right away. It gets argued about for a long time. However, if they would take this piecemeal and start with the corporate tax rate, and then talk about personal tax rates only for the $400,000 a year income and above crowd, and then go into the capital gains, if they basically, and then come back to the increasing it for everybody, I think they'd run into a lot more success, right? So success for raising taxes is bad for us, the consumer, because that means that they would get these policies through. I don't think that'll happen. I think they'll package it all together and it'll be a debacle, and it won't get passed anytime soon. But we'll certainly be talking about it. So that's what I think is going to happen. Again, what affects the market the most is actually that corporate tax rate. But here we're talking about personal tax rates. So let's talk about people in taxes. Everybody hates taxes because that's bad, right? Well, taxes pays for roads and a lot of other things. So for the National Guard to come in and save the bacon of democracy. So, I mean, you should be paying taxes, right? So the question is how much, what's fair, and that'll be argued about till the end of time. I personally think everybody should pay at least 10%, but I know that that's not popular. It's weird because it seems like most people aren't paying much of anything, and I haven't really paid much. I pay the minimum. I know the tax code, and I follow it and pay what I should, what it tells me I owe. But traditionally, that has been less than 10% by the time you take all the tax favored stuff that I have there. So we shall see. Yeah, I see your point there about military pensions. Hey, now let's not go there on that. But when you have states like California, which people are leaving because their personal tax rates in the teens, well, if you tack on like a 50% tax, highest tax bracket, 50%, plus you're paying another, 16% in state taxes, well, people are going to have to leave those states. So I think as they raise they're already, the high tax rate states are under fire anyway. But if you raise the underlying rates with it, then that really causes that problem. So come on to Texas, just leave your crazy behind and become more normal. All right, so what are the federal tax brackets and breaking them down? Okay, so created in 1913. I kind of thought it was older than that. So I don't know what we did for taxation prior to that. I've never really looked into it, but that's interesting. So only a little over 100 years old. Let's see, to fairly tax the citizens and largely fund wars. Back when we used to do that, it's kind of nice that we haven't had huge wars lately. We've just had the little dust ups, if you will. All right, Tax Cuts and Jobs Act of 2017 kind of brought everything back down. There's some history in here, which is what I'm looking for. There is a sunset for the Tax Cut and Jobs Act. I want to say it's 25 or 26, so it'll have to be voted on here eventually, not during this administration, but they do. They will have to be voted on. Okay, so 16th Amendment, yep, top tax bracket initially was 7%. Kind of crazy. World War I went up to 77%. Yikes. Came back down during the Great Depression. And then World War II, look at that, 94%. Isn't that crazy? And then came back down after that, but did hang around 70%. So if you're thinking, now I could see that. I could see easily the top tax bracket going well north of 50. And it'll probably be a, million and above type income, but I could see that going pretty high under a blue wave administration. So I think we have it pretty good right now. Obviously, if you are in the Roth conversion mode, I think sooner than later. If you haven't done it already, I think you want to do it now because taxes are only going to go up. Otherwise, you're going to kind of be stuck. I'm doing it. Same thing with selling a business, any of that stuff where you're taking the gains. We talked about that earlier. So we shall see. But I do think taxes are going up, and we'll see if I'm right. I don't know. There wasn't income before 1913. Maybe. I don't know. It's less income. All right. I'll buy that. But yeah, I don't know. It's kind of weird. I just didn't realize the tax code was that new, if you will. So, all right. That's all I have for today. Thanks for the comments out there going back and forth. Again, no trades today, but looking back at refresh these to see where the market is real quick. 0.5%, 1.5%. So there's your tech bounce, right? So tech is dead yesterday. Tech is back today. Yay, market goes higher. So with that, there's the 2K revived. I just saw it. So that'll be a theme probably by tomorrow morning, is people are going to be like, I want to check for 2,000 now, not just 600. So, all right, that's all I've got for today. Thanks so much, and we will catch you guys tomorrow. Bye.